Hey everybody, today is May 2nd, 2023, and today we're going to talk about the stock market. Today is the beginning of the latest Fed meeting, and tomorrow they're going to release the latest update to the interest rate of the Fed funds rate, and we're going to see if they're going to raise rates, pause, or potentially lower rates. And before we begin, please read the disclaimer and pause this video as you read it. Okay, so in my last couple of videos, I talked about how this Fed meeting is very important, and the market wasn't really doing it much until this meeting, and I believe it's going to be a big catalyst. I've said many times that I believe they're going to raise interest rates 25 basis points this time, and maybe another 25 basis points, right, for a terminal rate of over 5%, and maybe they're going to consider pausing then. Right now, we're seeing some of the effects of these rate hikes that we've seen, these record rate hikes over the last year, right? We're starting to see regional banks under pressure, and just today, it just seems like there's more, like every other week, there's another bank that's getting like crushed in the markets, right? And with depositors fleeing, and so we're seeing the effects of that right now with the market down. But also in anticipation of what the Fed is going to do tomorrow, right, with their potential interest rate hikes of 25 basis points, which is what the market is expecting. Now, I said that we've basically been the S&P has basically been trading in this range between 3,800 and 4,200 for about a year now, right? And so, of course, as we reach the upper boundary around 4,200, there's going to be some resistance, and that's exactly what we saw, right? We basically went up here, and then we basically just wicked down right here, right? We had basically a wick over here, and then we just plunged on Monday morning, which is on Tuesday, right? And yeah, so basically. Give me a second. Yeah, so coming back to the SPY, which is the ETF that tracks the S&P 500, we're basically seeing not really too surprising of a pullback, right? We haven't been able to break above the previous swing high, and now we're possibly coming down. And I said that these moving averages will probably act as support, but we also have some gaps here, right? I said in my last video that I wouldn't be too surprised if the Fed, not only if they raise 25 basis points tomorrow, but they also talk about how inflation could still be at elevated levels for longer than expected. We can see the market pull back, and I think it'll hold support at these moving averages, but also fill these gaps, right, that are open still. But as long as the market holds the structure, higher lows since October, right, higher lows since October, I think that the market overall should be fine, because as you can see, even though we've been going sideways for a year, you can see how we've been hitting the same resistance level around 4,200, right? But we've also made higher lows, which means that we are in this short to intermediate term ascending triangle, right? So if we're able to hold these levels and still make higher lows, even if we do pull back to these moving averages, filling the gaps, right, it's possible that we can finally have a nice breakout to the top, right? And we've just been consolidating basically, and yeah, so as you can see, the chart still looks pretty good, right? I mean, a bear market is lower high and lower lows, right? But we pretty much put in, at least in the short to medium term, we put in higher lows, right? So, but we haven't been able to make higher highs. So basically just going sideways for now, right? And so, but it seems like we're consolidating like a spring. Eventually that spring will unload and basically either shoot up or down. But right now, I'm giving the benefit of doubt to the bulls, because we are able to maintain higher lows and form what looks like to be an ascending triangle. Now, of course, it's the beginning of the new month, so you see we had a monthly close, which looks pretty good. Let me get you the yeah. So this chart, you can see how we had a nice monthly close. Now we're starting to pull back a little bit, but overall, the market structure looks pretty good. We're making higher lows, as you can see on the monthly chart, and in the bigger picture, over a decade plus time frame, it does look like we're just pulling back to the 50-month moving average, right? Like we saw here. Whoops, let me get you the pen over here, and right here, and possibly over here. On October was our pullback to that 50-week, right? After accelerating really high post-pandemic, probably good to see a nice pullback to our longer-term moving averages, the 50-month and the weekly chart, down to our 200-week moving average, right? So overall, the market is looking pretty good. Fear and greed is neutral. So at this point, it's anybody's game, right? If the Fed, which I believe will hike 25 basis points tomorrow, but it also what matters is what Jerome Powell says in his speech, right? Does he believe that we still can have a soft landing and avoid a official recession, or are we still going to have some some headwinds going forward, right? But I think worst case scenario, we'll probably see a pullback to these moving averages, fill these gaps that over here, so over here. But as long as we make higher lows, right? If we don't take out this low here around 3,800, which is also this Fibonacci support level, right? I do think that we can come up and finally have a chance of trying to retest this resistance level of 4,200 and finally breaking above and trying to challenge the next swing higher level that we set in March of 2022 around 4,600, right? So really not much else to say. We're gonna have to wait and see what the Fed says and does tomorrow. So I'll definitely update you on Thursday with a chart on my Twitter account, EddieLux_. So please subscribe, follow me there if you haven't. And yeah, that's it for today. Before we go, let me just say the VIX is definitely spiking today ahead of the Fed meeting. But I also said this in my last video how we're down like 6 weeks in a row, right? So it's not unusual to have like basically like a bounce, even if volatility continues to go down lower, right? It's usually we're not going to just keep going straight down, right? There's going to have some volatility in between for every once in a while. So again, nothing out of the usual, out of the ordinary, out of the usual. You know, a nice healthy pullback would not surprise me, as I said, and hopefully as long as we make higher lows and defend, at least the 200-day moving average, or just around 39.50 on the S&P or 395 on SPY, then I wouldn't be too worried about that. But if we keep going down low and we take out this low at 380 SPY or 3,800, then yeah, that would be worry me. But that is for another video, right? We definitely want to take the market as it comes and not think too far ahead, right? Especially with the big catalyst like the Fed meeting tomorrow. So again, I will go over what the Fed does on Thursday's chart, and next Tuesday I'll come out with a video and we'll go over what the Fed did and how that could affect the market going forward for the remainder of the month. And we'll see if sell-in may go away is a self-fulfilling prophecy, or if it's the exception this time. Okay, thank you for watching this video. If you found it useful, helpful, informative, please like this video, leave a comment below, and subscribe for updates. I appreciate your support. Thank you again, and have a great day.